All right, so Adobe had earnings, and going back to the video I made last time regarding selling an out of the money naked put on earnings at expected move and then closing it the next day regardless of what it's worth. So no rolling the put, no trying to save the trade. So Adobe had earnings today after hours, so it closed at around 365. I didn't have enough buying power to sell a naked put. As you can see, my buying power, total buying power US is 428. It was about 5,000 before placing the trade. I didn't have enough to sell a naked put on Adobe. The expected move now on Adobe. So if I look at the straddle value at the money was about $28. So if I go to all strikes here and find 365, that's what it closed at. So 365 was around 28. Okay. So, but when I entered the trade, the stock was trading at around 363. So what I did is I just did 363 minus 28 about. It put me at 335 strike. That would be the expected move. So instead of selling the 335, I just went for the 330. And the trade I did here to replicate or simulate a naked put, because I don't have the buying power, I just did a wide spread. So I sold the 330 put and I bought the 285 put. So it's a spread basically that takes about the width of the spread. So 330 minus 285, so 30 plus 15. So it takes about 4,500 of buying power minus the credit that I received. So I did this spread instead, collected 355 from the short put, but I had to pay 55 cents on the long put. So basically I did it for a net credit of $3. So it's as if I sold a naked put at 330 for $3. So that's the trade that I'm going for, expiring tomorrow. So as long as Adobe stays above 330 by tomorrow expiry, then the $3 collected is a winner. So that's $300 with one contract. Now, if you remember, I had a trade on for, what's it called? Was it Coop? No, it wasn't Coop. It was the other one, the DocQ sign, yeah. So I did the same thing with DocQ, but DocQ was able to do naked, but DocQ was a loser. So I ended up selling before earnings a 74 put for $1.62. I ended up buying it back the next day for $8. So this one was a loser. But that's the strategy that I'm going for, or that I'm trying out or testing, is selling an out of the money naked put for earnings at expected move. But this time, no saving the trade, no rolling, just take the loss. So for DocQ, I took the loss. And actually, it's a good thing I took it, because look where DocQ is trading at. Imagine if I was trying to roll it, it's at 56 now. So it's a good thing I took the loss. And then Adobe, for example, so you can see after hours, Adobe right now is trading at 348. So I just needed to be above 330 by tomorrow expiry, and the trade's a winner. So that's what I like about this trade, is that the stock can drop a little bit, and it could still win. So it's not just either up or down. It's either up, either flat, or drops 25 points, and it's still a winner. Now, especially that tomorrow's expiry, at the open, the spread might be worth like 50 cents or maybe even worth $1. If I go to positions here, I click on Adobe, I'll just click on create order here, and then I'll just try to close the trade. See, before the close, it was actually a bit profitable. I sold it for $3, probably could have closed it for $2.70, so that would have been a $30 profit. But of course, with commissions, not worth it. So tomorrow, maybe, hopefully, this leg is worth maybe $1, so I can close the whole trade for $1, maybe making me $2 profit. We'll see. Hopefully, it doesn't drop more than that. Sometimes after hours, it trades at a price, and then pre-market, it trades at a completely different price. Here, let's look at the after hours of Adobe exactly on the chart. Let's see what happened here, to be specific. Yeah, so you can see here that big red candle. So the lowest point after hours was 340. That's the lowest it traded, so about 10 points away from my short strike. But then it came back up, and yeah, okay, the highest it traded was 365, but yeah, then came back down again towards the end of the night. And yeah, so right now the last trading price is around 348. So yeah, hopefully it stays around that price tomorrow pre-market. We'll see. But that's the idea behind it, is I sell a 330 put, I collect the premium, regardless what the stock is trading at, I close it. Most of the time, it's a winner because there's a lot of room for the stock to move and the trade is still a winner. Unless it pulls a Netflix and drops 25%, then I'm in trouble. So I'm not sure I would let it expire worthless. I would try to close it. And the way I would close it, I would just click here, click create order, and then the order window, entry window pops up automatically. I put the price that I want. Let's say I want to, and then I just send the order. All right, if you have any questions in the comment section below, like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.